All right, everyone. Thank you for tuning into this live session. So it is the 10th of June, 2024. So it's 3:30 p.m. currently. So beginning on the dollar index, price has moved away fairly nicely from our area. So if we go down into the daily time frame, if we can get this daily candle to close above this high, then I definitely think momentum is going to continue to the upside to potentially take out those highs right there, right? So what I've been looking at, again, what I spoke about before, is the fact that, let's get rid of these, the fact that this was the last structure point on the 4-hour time frame. So now price has broken above there very nicely with a candle body closure. So we can actually mark this on together and we can call that a 4-hour break. Okay, so price has broken bullish on the DXY on the 4-hour, which is now in alignment with the higher time frame bullish structure. Okay, so potential higher prices on this. So let's have a look at the Forex factory calendar, because I just want to double check any news that might come out this week. So that's pretty much it for today in terms of news events by the looks of it. We've got some news 7 a.m. tomorrow for the pound. Again on Wednesday, 7 a.m. for the pound. And we've got core CPI on Wednesday as well. And we've got FOMC statements and economic projections. That's at 7 p.m. So it should be quite a volatile week. We've also got Thursday core PPI, not CPI, PPI on Thursday. That's at 1:30 p.m. So keeping an eye out for that. That could actually send the price higher in alignment with our analysis. So that could be very, very nice to see. Okay, so going on to euro dollar. So this is pretty much the DXY, but now inversed. If we go to the daily time frame, I'm going to take that off. So on the daily time frame, we have gapped to the downside. I don't think we've gapped to the downside on Oanda. No. Okay, so 4-hour wise, again, we've broken that structure, haven't we? Broken that structure to the downside on this as well. So it's worth actually noting on here. Let me just take that away. It's worth noting that we have broke that low right there as well. Okay. So from a daily standpoint, that low would make sense for it to be taken just because of that bearish structure. High, low, lower, high, lower, low, lower, high. The only thing is that low right there did take out all of this liquidity. So this could just be a pullback before we continue higher. Another thing that could contribute to the fact that we could come down lower is this monthly imbalance right there, with liquidity resting above as well. Right there. So that could be a contributing factor for this to want to push down lower before we continue higher. But we'll have to see on that. Obviously, it all depends on what the dollar does, to be honest. It really depends on what this does. So the reality of it is the news events that come out this week and even next week as well. Let's just see what we've got next week. Heavy news there. Some pound news. Some heavy pound news on the 20th. Unemployment claims and euro news there as well. So yeah, what I'd want to see is a either a break of this low to tell me this low is going to be taken, or a break and close above this high to tell me, right, okay, momentum is to the upside, therefore we could actually be heading into this monthly imbalance, because we've got that right there, let's not forget. Okay, which is resting above the high that was created. So price does like to do that. This is something we need to keep in mind as well. Like when price reaches a high and comes back down aggressively, it tends to retest, or it will go slightly higher and then crash. So what I mean by this is, like, there's examples here. So price, even here, for example, like price reached there, came back, just reached higher, came down. Even here, price reached the high, price came down, reached a little bit higher than before, and then came down. Similar thing here as well. Price went there, came back down, went a little bit higher, crashed, went a little bit higher, crashed. Okay, so price has obviously come up to here. We've got this monthly imbalance resting above here. So price could reach above this high and then come back down. So there is that to think about. So that's what I'm currently thinking on this. All right. Obviously, that is on a monthly time frame, so it is going to take a fair bit of time if that was to happen. But with that bias in mind, I mean, we could obviously have the bias of the fact that dollar is strong up until that potential monthly imbalance where we might get the pullback. So, you know, there still is going to be some decent trades available with the dollar cross pairs. Obviously, it's going to be bearish in terms of the dollar cross pairs. Obviously, if you got euro dollar, that could be bearish. GU, that could be bearish. So speaking of, let's just look at these. So GU. Okay, so on the 12-month on GU, right. What we did is we actually wicked that low. Okay, which is very, very important in my eyes. Very, very important. Now, what we've done since then is obviously closed back up here. So price didn't want to be down there for very long. Closed back up here. We had a bullish year, although that was trading completely inside that year right there. If we go to the monthly time frame, just see if we can see a little bit more information. On the monthly time frame, I do like the look of this. I really do. So that's a monthly imbalance right there. Okay. Monthly imbalance. Which also rests above that high. Okay. Which also rests above that high. So what I can do now is just draw on that, which represents liquidity. Okay. Similar to how we took liquidity down here with this red line. That could be resting liquidity right there, which is below the monthly imbalance or below a monthly imbalance. So that's very nice. What I can also mark on as well from a monthly perspective is the fact that we used this one down here, this imbalance I'm talking about. We used this, retest, move away. We created another one, retest, are we now moving away? So that one right there. Okay. One thing I know we have on a weekly standpoint is this down here, but that's quite a long shot to say the least, but it's still possible right there. So that's a weekly imbalance. But as we know, the higher time frames more often than not do rule over the lower time frames, if not every single time, to be honest. So monthly imbalance there, monthly imbalance there. So what we'd be looking for now is a potential continuation. Now, this is why I say it's, you know, it depends on what the dollar does, because it could be an interesting point in time for pound dollar as well. Because if the dollar continues pushing higher, then that would mean this needs to come down lower. Okay, obviously I've just highlighted a pretty nice area in which we could come, which is 1.17. Yeah, there or thereabouts, 1.17. And the nice thing about that as well is it does align within a discount of this low to that high. So from this low, to recap, to that high right there. Look what's below the equilibrium, or in the discount, below the 50%, below that blue line, that weekly imbalance. Okay, so again, this is a weekly time frame, so that's going to take a fair few weeks or months for that to play out, if that did play out as well. But it's not to say it can't do that. It's not to say it can't do that. Where we are currently here, this could be a lower high for price to continue down into there, if we look at it like that. So on the weekly, there's nothing else to discuss really, other than the fact that we can draw this on, because we might find our feet in there as well. Weekly imbalance. Going on to the daily, what I like about this weekly imbalance is the fact that it aligns within a discount now. Okay, we've got part of it in a discount there. What we've also got on the daily, before I go any further, let's just draw on the daily structure points. So we've got daily there, so blue is daily. That's how I like to keep it. We've got the low, the high, higher low. We don't know this is the higher high, so to speak, just yet, because price could come higher, in which we'd be dragging the Fibonacci higher. But let's just say, for example, it is. Again, we don't know that for a fact. Then this would be the new leg. So from this low to the high. Again, what do we want to be doing? We want to be buying within a discount. And what we have within this weekly imbalance is a daily imbalance. Right there. And we even have an imbalance right below that. Okay. But I'm just focusing on this one for now, because it's the one that's inside this weekly. So it's a refined area, so to speak. What we can now do as well is go into the 4-hour time frame. Okay. Into the 4-hour. Because if price does want to come down into here, it potentially could use a bearish imbalance for it to push down into there. So what we have there is a bearish 4-hour imbalance right there, which aligns within a premium of that leg to the downside. So if we are going to come down into here, what I'm saying is it could do this, come into there, and then come down. Okay, because obviously the market moves in waves. We all know that. Alright, so, and what we have as well is this daily supply candle, this bullish candle before the bearish move. Daily supply. Okay, I'm actually going to take that 4-hour imbalance off, because I prefer the look of that from a daily standpoint. So that's what I'm looking at on GU. That's where we are currently, and that is what I'm looking at. In the middle of a range, really. But I like the fact we've come off of this monthly imbalance. I do like that. And the fact that we've also printed bullish daily structure. I also like that fact as well. And the fact that we've closed above this high. Just slightly on that daily candle right there. We've closed above that high. So far so good with the bullish momentum. We'll have to see what we are. We'll have to see what happens when we come down into here. I'm actually going to get rid of that weekly imbalance, just to keep the charts nice and clean. Let's look at GJ from a practical standpoint. I have just entered another trade on GJ, which I did share in the Discord. So going into the 4-hour, if we remember, this is what I said that we were coming into, this 4-hour imbalance and then move away. What price has done, and this is where the trade was actually taken from, so I'm going to go into this one now. Price actually came into a 1-hour imbalance bullish imbalance that was created today at 2 p.m. So this was this 1 hour candle opened at 1 p.m, closed at 2 p.m, which then left this 1 hour imbalance. Okay. And the entry was the same thing. So it's the same entry model. The entry was that candle right there. Yeah, because it closed above this right here. So using the bodies, it closed above there. Stop is below here. And I'm going for a 1 to 3 on this. So the TP on this is 200, 383. I think I've put in the trade alerts. Yeah, 200, 383. So yeah, could be a very, very nice setup. Hopefully that does come through. I've obviously got my alert on there to go break even. So hopefully we do get that. Obviously the TP, not just break even. And yeah, so I do like the bullish narrative on GJ. It does make sense to me. Like I said before, although we are fairly high in the leg, well, I say fairly, we're actually very high in the leg. This is still bullish behavior. So why not ride on the back of the train? So that's sort of the methodology behind that. And also, not to mention the fact it fit the plan in which I've been studying for the last couple of months. Heavily. Okay. And just to touch on that fact once more, because I think we got interrupted on the last live. So I'm now on June right now, 2021. So we had a 13% month in July, and then negative August, negative September, 10% October, near enough break even November, 5% December. Okay. So I will keep you all updated on what these results are. I'm just going to keep going and keep going, because the more data, the better. Data is our best friend. Without data, how do we know that we're doing the right thing? We're literally just stabbing in the dark without any data. So it's so important to gather it correctly. And not only that, I actually enjoy gathering data because it just adds to my confidence, but not in a negative way to say, oh, I'm now going to start risking 20% a trade, not anything like that. But it's more in the fact that it's just, you can sort of relax more when you've got the data behind it, when you've got the data behind a specific system. Yeah, you can sort of mentally relax more, you know, when you do run into drawdown periods or slow periods, because at the end of the day, trading is, you know, the long-term game. It's the results that matter over a sustained period of time, not, you know, what's been the results today or yesterday or this week or these, you know, couple of weeks. I mean, yes, they are important, but, you know, when we zoom out, you know, we can really see that some months when they go well, they can pay for the months that don't. You know, for example, last month was a 30% month. I mean, that was a phenomenal month for this system. It's actually the best month that I've seen so far. Second one to that was 26% in 2023, November. But anyway, that's just figures on the screen. Obviously, that's not live results. It will be one day, 100%, because obviously I have them live now. So we'll see what happens with that trade, with the long trade, and we'll go from there. I'll obviously keep you all up to date. If and when we go break even, hopefully we do, because, you know, that bullish momentum is still intact in my opinion. And also what we've done is we've dropped equal highs below this 1 hour imbalance, which to me screams liquidity right there. Absolutely screams it. So at least we're going to go there, at least, in my opinion. Yeah, so that's pretty much it. Actually, before we leave the live, let's just skim over silver and gold if we've got time as well, but focusing on silver primarily. Remember that daily imbalance was mitigated just there. Strong candle down into there, but you imagine the traders that are potentially going short from there, it's obviously not going to make it easy in terms of price action. obviously that is a indication that we could come down lower, but I'm just focused on where we've actually ran into, looking left. And that's something we always need to remember to do, is always look left, because that's where the footprints are, is to the left of the chart. So on the daily time frame, as we mentioned, because that is a daily imbalance, the 30-minute would have needed to have broken, which it did, but it's just unfortunate when it did, because that was last night at 11:30 p.m. So I doubt anyone's going to be trading then, but that's when the entry signal occurred. Following that though, let's say we weren't to get involved in that, which potentially we wouldn't have. There's actually, look, okay, perfect. So we've actually created a fresh 4-hour imbalance just there, okay? A fresh 4-hour imbalance. Coming out of the daily, we've now created another 4-hour imbalance. So because this is now a 4-hour, let's just double check that we don't have anything on the 1 hour. No, we don't. Anything on the 30-minute? No, we don't. All right. So what we want to do now is wait for a 15-minute shift. And that could be a phenomenal buy on silver. A phenomenal buy. So let's see what happens on there. In this particular case, I'd probably put the stop below the 4-hour imbalance, plus 10 pips potentially. So what I'd want to see now is this high. Again, this is what I've been looking at. That high right there, so that those two bodies, basically, if we get a closure above there on a 15-minute time frame, that could be a great entry. So again, just to recap with this, you see where it says 1,844. That is 18.4 pips. Okay, so we want to round it up a pip. So 19, add 10, 29. Okay, well in this case 2,900. It's just how silver works out. Don't ask me why, but I will look into that as to why they do the numbers like that. But that could be a great entry to play it safe. Because we have, we have technically printed 4-hour bearish structure. To play it safe, what we could do is target. So let me just take these price labels off, and this one. What we could do is potentially target this 4-hour imbalance right there, which would give us a 4-to-1. So not bad at all. So I am just going to mark that on there. Again, this is something I'm forward testing. It's not something I'm back testing. It's not something I'm live with. It's something I'm forward testing. So I'm just marking the setups on there as and when they happen and just letting it play out. Because obviously silver is not something that's just going to be wiped off the face of the planet. So if I can, basically master a system to trade silver, similarly to how it can be traded on gold as well, then it's a win-win, really. It's going to be a win-win. So, and this style as well is more of a swing style strategy, so to speak. I'm not really going on the 5-minute time frame like I do on GJ. But that's not to say it's not effective, because we've had some really good entries on here, just what I've been marking up. We had a great one there out of the 4-hour imbalance. Again, the same entry model. So if we just recap on that one, it was those bodies right there that needed to be broken. Lo and behold, it did. Again, just unfortunate at the time, really, because that's 2:15 a.m. But at the end of the day, you can't really time specifically when the setup's going to happen, especially with something like silver, So yeah, let's see in 5 minutes if we close above there. That could be a good little setup right there. what we can actually do as well is just double check when we come out of something like that, because we had something similar there. So we had a 4-hour imbalance that was created once we moved away. So let's just double check if we had a 15-minute break on that one, and if we could have capitalized on it. So this is where that was right there. So in this particular case, let's just zoom right in. Yes, so that low wicked that low, which therefore meant those were the two bodies to be broken. Lo and behold, we had the break. There's the stop. So we got 11.4 pips. We want to round that up to 12 pips, add 10, so 22 pips on the stop loss. Just there. And then the TP would have been the high, but unfortunately we reversed. But let's just not ignore the fact that we actually reversed. Let's just look why and what we could have targeted in terms of bearish imbalances and whatnot. So we did have a bearish imbalance right there on the daily. So let's just mark that on together. So that's the blue lines. So if we go back into the 4-hour, that's that right there, which if we targeted the bottom of that, it's still a 1 to 3, which still not bad. It's not bad at all, really. And then we've got a 4-hour imbalance right there. So let's just put on that line. If we had targeted that one, a 4.59 to 1, not bad at all. So yeah, if we do get that closure, could potentially take that. Could be a really, really good trade to take. Again, aligning everything up that we know. Yeah, could be a 4 to 1 at least. So I'll update everyone on that one. But for now, let's just hold the GJ trade. It is a nice profit at the moment. Slight profit. All right. And yeah, we'll catch up on tomorrow's live session anyway to recap what's happened with what and why. Okay, thank you everyone for watching once more. If you've got any questions, please feel free to drop them in the Discord group, where myself and Henry will, be more than happy to help anyone that has any sort of question, trading related. So yeah, that's pretty much it. Like I said, I'll catch you on tomorrow's live session at 1:30 p.m. If that changes, I will let you know. But as you all know by now, I do cover the afternoon sessions and Henry covers the morning ones. So yeah, thank you for watching. Take care and I'll see you tomorrow. Thank you guys.